Welcome, Chris, to the BS Manthan. Let me begin by asking you.
Oh, yes.
Let me begin by asking you. It's a derivative of what you send us on a weekly basis. Greed and fear. The markets, do you think, have been running on liquidity and greed till now, and is it time to be fearful?
Which market?
The global equity markets.
Well, yes, it's hard to generalize about the global equity markets, but clearly in the case of India, ironically, the Indian stock market peaked when we had our conference, as in Jefferies, last September. So clearly we have gone, we are not in a greed phase now in India. The good news, though, is that India has already corrected, because my base case at the start of this year is that we reached a all-time peak. Well, on December the 24th, we reached an all-time peak of US stock market capitalization relative to world stock market capitalization. So US stock market was valued at nearly 70% of world stock market capitalization. My guess is that represents a peak, and my guess is the US will underperform from here. And I think the language we increasingly heard in the fourth quarter last year of US exceptionalism represented the kind of rhetoric you would expect at a massive peak, just like actually back in 1989 when people said Japan was going to take over the world. So I don't personally believe in US exceptionalism as applied to the stock market. Where the US is truly exceptional in the economic context is that it has the ability to print the reserve currency of the world. So right now, I think the real risk is Wall Street. And then, of course, in China, where stock market is being very depressed, we are seeing the early stages of optimism towards China, but we're not yet in the greed scale.
Talking about US, Chris, in one of your recent notes that you had said that you expect the Trump administration not to follow through on their tariff threats. They will at best be scare tactics. What if it does become a reality and there is no going back? Is the global world, is the world prepared for a harsher tariff?
No, I don't think the world is actually, because I think unfortunately many people have my view that it's primarily a negotiating tactic. So there's a fundamental contradiction in Donald Trump's economic agenda. The bullish part of the economic agenda is tax cuts and deregulation. That is just plain bullish, and that's why the financial stocks in the US rallied strongly when he was elected. But then the other part of the economic agenda, which is tariffs and controls on immigration, are fundamentally bearish from a growth standpoint. So there's this contradiction. My base case has been that the tax cuts and the deregulation will prevail, but there'll be a lot of noise. I'm hoping, I personally don't believe that Treasury Secretary Scott Bessent or Elon Musk believe in tariffs. So I'm sort of hoping that the tariffs are first and foremost a negotiation tactic. But if I'm completely wrong, this is plain bearish. Clearly tariffs hurt economic growth, and they'll be very negative for Americans. America has very high inflation. Ordinary Americans face very, very high inflation. Anybody who's been to America recently will understand when I say everything in the US right now is a complete ripoff. Higher tariffs will just make life more expensive for Americans. And the key, Donald Trump won the election for several reasons, but if I had to say the most important issue in the election was the inflation. And the inflation came in America, we see in the last few years, came from the massive printing of money by the Federal Reserve in 2020 when the pandemic happened. And they're still facing that inflationary after effect.
So how do you expect the US Fed to respond to all this, and then the other global central banks?
Now, my guess is the Federal Reserve's gone on hold. And my guess, later in the year, the Federal Reserve will start to cut rates. Although my guess is that the Fed will ultimately, will not enforce, will fudge the 2% target. So my base case for the last few years is that the US inflation will post-pandemic era will be structurally higher, more in the 3-4% range. But this administration is now actually moving, the Trump administration is trying to move the focus away from the Fed and very much onto the bond market, 10-year Treasury bond.
What's your view on China? It's one of your highest weights in the global portfolio. What explains your bullish stance here at a time when the country actually is probably at the epicenter of the tariff war?
Right, so well, there's two reasons. The first reason is that China just got very cheap. So the Chinese stock market at the end of late last year bottomed at about 8 times earnings. And finally, in the last few months of 2024, we saw the Chinese central government start to actually focus on stabilizing domestic demand. So my base case is the Chinese property markets has started to bottom out in the fourth quarter last year. But, you know, we've had a major price adjustment. Residential property prices in the major cities are down about 40% from the peak. So I think we're stabilizing there. But the other key point about China is the government's now focusing on supporting the stock market. All Chinese corporates are being put under pressure to buy back their shares. We had the symbolic meeting last week between President Xi and the private sector. We had the morale-boosting news flow news of DeepSeek, which has reminded everybody that the Chinese are not being sitting still on technology, and has also highlighted the massive disruptive potential of AI. But then we've got this issue with Donald Trump. So I've got a slightly unusual view on this. My base case is that the relationship between the US and China will improve under Donald Trump, not get worse. Because the relationship got really quite bad during the Biden administration, because the national security lobby in the US were driving the policy towards China. So we had the attempt to stop China buying advanced semiconductors. My view is very simple. Donald Trump is not a national security guy. He's a business guy. He's not anti-China or Chinese people. He asked President Xi, in fact, to the inauguration. He did not ask the British Prime Minister or the French President. And when you hear what Donald Trump when he talks about tariffs, tariffs for Donald Trump are a means to an end. The end is to get production moved to America. So what he says is, I want to threaten to raise tariffs so high that if you want access to the US consumer market, you have to move production to the US. So the obvious thing for the Chinese to do right now, which my guess is they're already doing, is to put out signals to Donald Trump saying, Mr. Trump, we're very happy to move production to America. Tell us what you want us to produce, and therefore present Donald Trump with a win. So that could turn a negative into a positive if, say, BYD was suddenly producing in the US. The TikTok example sort of hints that what I think may turn out to be true. The national security lobby wanted to shut down TikTok in America. Donald Trump has resisted that. TikTok's still functioning. But what he's saying to the Chinese, I will tell the national security guys to take a hike, but I want 50% ownership of TikTok in America. So he's he's coming from a different angle from the anti-China lobby in America.
But some of these measures that you highlighted in terms of property market, capital market measures in China, they had propped up the markets a year ago, but then nothing much happened out thereafter. What's different this time around? Where's the conviction coming this time around?
The key measures, the key change in policy came end of third quarter, early fourth quarter. So we had the Politburo formally commit to stabilizing the property market. And by the way, President Xi showed up at that Politburo meeting. Before that, President Xi had said homes are for living in, not speculation. And this is a bit technical, but the other thing they did was they finally addressed what's been a real negative in China the last 2 years, and that is that the collapse in land sales had massively reduced the tax revenue of the local governments. So the reality was that many people working for local governments were not getting paid, and SMEs were not getting their receivables paid by local governments. So we had a central government local government debt swap announced in October, which reduced the debt servicing burden of the local governments, and so the hope is that problem's beginning to clear. So the rally in China actually is not about a boom, it's just about Chinese consumers going from pathologically cautious to moderately cautious. The Chinese stock market could double just on that. We don't need a boom. The Chinese consumption story doesn't need a big stimulus, doesn't need big handouts. There's massive savings in the banking system. It's all about psychology.
So developed versus emerging. Where do you see big money chase? Which markets will the big money chase? And what is India's position in this new world order?
We ended last year with people only wanting to own the US market. So there's massive flows from Europe, UK into US equities. There was this talk of American exceptionalism. So that was the only market people were interested in investing in. My guess is that's the peak of that trend. But from an emerging market standpoint, the key variable is that China's important, but the key variable is the US dollar. So the dollar rallied on Donald Trump's election, which was to be predicted. We had a dramatic surge in the small business confidence index, which reflects the fact that 99% of small business owners in America are Donald Trump supporters. We had the same development in 2016 when Donald Trump was elected. But my base case, until proven wrong, is we will have the same pattern as the first Trump administration, where the dollar rallied when he was elected, but it peaked when he walked into the White House. So I'm hoping we have, from an emerging market standpoint, and indeed from an Indian standpoint, I'm hoping that the dollar, we have the same trend. The dollar rallies when he gets elected and peaks when he walks into the White House. And the other point is Donald Trump doesn't want a stronger dollar. So that's the key variable for the emerging markets. The Reserve Bank of India has recently commenced an easing cycle, which makes sense because you have high real rates here. But the ability of the Indian Central Bank to ease is going to be heavily dependent on what's going on in the dollar.
So, in terms of the Indian markets, Chris, do you think the valuations have corrected enough for you to or investors to look at buying right now, or should one still wait on the sidelines before some clarity emerges on the global order and as well as where the corporate earnings are headed, where the economy is headed?
Well, you can hear me better now. Yes. So on the Indian market, clearly the valuations were very high at the peak. In a world where the US is not correcting, it would probably make sense to start buying now. In a world where the US is going to be correcting for a few months, which in my view is the risk, clearly India there's no hurry to buy Indian stocks. So I think it's all about how you're positioned. If you own no Indian equities at all, I would start buying now. If you already owned a lot of Indian equities, I would wait. Because what we have to, the other thing going on right now, which is very important, is Elon Musk and Dodge. So he has this dramatic agenda to cut $2 trillion from the US government's budget by the middle of 2026. That is a dramatic task, but anyone who knows anything about Elon Musk knows that if he spends 6 months in Washington, he can achieve a lot. But if he really succeeds in this task, and by the way, nobody in the markets believes this is possible, but that also means it's not really priced. But if he succeeds in this task, it will be very positive for the US in the medium term. However, there'll be a big deflationary hit to the US economy, and it will be equity market negative. In my view, the Treasury bond market is already now beginning to start to price Elon Musk and Dodge, in the sense I'm saying the 10-year bond yield would be higher today if Elon Musk and Dodge did not exist. But if tomorrow Elon Musk walks out of the White House because he has a row with Donald Trump or he gets fed up, then the focus will go back again on this very negative fiscal situation in America, and then the Treasury bond market will sell off and the dollar will sell off. So I think, but the risk to the US equity market, so long as Elon Musk is cutting everything, is we're going to see the US economy weakening. Because you have a 7% fiscal deficit in America, and the fiscal deficit has been driving a large part of the growth. 67% of the jobs generated in the last 12 months in America, based on the non-farm payroll data, have come from government-related sectors.
As regards Indian markets, Chris, do you think there has to be some kind of a reset in the minds of investors in terms of return expectations going ahead, let's say from a one-year perspective?
No, on the Indian market, we've had a lot of foreign selling, and actually the amount of foreign selling has surprised me. I think it's partly explained by people rotating into China. But what's been remarkable is that the flows into the mutual funds have continued. Talking to mutual fund managers in Mumbai this week, they're still seeing the flows coming in, so that's good in the long run. But I suppose the risk is if people start to see year-on-year declines, then you may get a risk of outflow. But clearly there's a divergence between the big caps and the mid caps. But what's been surprising to me in recent weeks is the intensity of foreign selling.
So this foreign selling, by when do you see that stemming?
Well, I've been wrong. They're selling. I'm genuinely surprised at the scale of the foreign selling. But I think what happened, the initial foreign selling didn't surprise me. They had to rotate into China. That happened. But more recently, I think this DeepSeek news has led to a second wave of foreign selling. Because DeepSeek, if you hadn't bought China already, then DeepSeek for an emerging market investor was the reason to buy it. I mean, you should have bought Alibaba the day DeepSeek came out, but then any emerging market fund manager who hadn't bought China by then, if you saw President Xi shaking Jack Ma's hand, which happened a week or two ago, then you really had to buy China. So you're seeing capitulation on the China trade. And all the global emerging market funds, were very underweight China.
So you're seeing a kind of a normalization in China flows, China equity markets then basically? Absolutely,
but so far the American fund managers were the least in China because it was a career risk to invest in China because you were based on the mentality prevailing in the US for the last 4 months, last 4 years. Investing in China was like investing with the enemy. So if it went wrong, you were taking a major career risk. You also had the risk that China, like Russia, could be kicked out of the benchmarks. So in my view, all these risks of China being kicked out of the benchmarks have reduced significantly with the arrival of Donald Trump. But this was a real risk in the last 4 years.
What are the risks for the Indian markets, in your opinion, let's say from a one-year perspective?
Now, the biggest risk for the Indian market today is that the valuation compression goes longer. I.e. that the small and mid caps valuations converge with the headline, with the blue chips. That's the risk.
So from a tactical standpoint, you have been structurally bullish on India, let's say from a 10-year perspective. Would you want to alter that view now, given that there have been FII outflows that have surprised you? Valuations are still on a higher side, and especially on the mid-cap front.
No, I think the biggest macro issue was referred to in the two previous sessions, because we at Jefferies have been of the view that a new private sector capex cycle has commenced. And if the private sector capex proves to disappoint, then the story in India is not terrible. It's not as good as what we've been saying. So what's been very clear in the last 5 years especially, or in fact the last 10 years, is that the heavy lifting on capex and investment has been done by the government, and that's obviously been extremely positive. But if the analogy is a relay race, you would want the private sector to take up the baton. So the reaction of the market to the budget, which showed a slowdown in the government capex, suggests the negative reaction suggests that the market doesn't fully believe that the private sector is going to take up the baton. So that, to me, is the key macro issue.
So what policy, thrust would you require from the, or would you want to see from the government, let's say over the next 1 year or so?
No, I think the government's done everything it could possibly be asked for to encourage capex. So I'm not blaming the government. I think the issue is with the private sector, as indeed was highlighted by the two previous speakers. So yeah, I think the government's done everything they could possibly be asked to improve the conditions for capex.
So from a short-term perspective, would you like to change your stance on the Indian equity market from a, let's say, structurally bullish to a more cautious and a nuanced?
No, I'm still structurally bullish. No, the issue is, the issue in the Indian market is simply a question of what's going on in the Indian market right now is the investor fund managers, the institutions are, because of this growing doubt about the strength or the concern about the lack of capex momentum, the portfolios are being adjusted away from capex-orientated stocks to consumption-orientated stocks, particularly discretionary consumption. So clearly the increase in sort of social welfare payments is encouraging hopes of better consumption in the rural areas. And then the budget, we had the tax cuts, which is encouraging hopes of an improvement in discretionary consumption. And we also have the fact that the RBI has resumed easing. So one aspect of this stock market correction in the last few months is simply that you've had a tighter liquidity situation in India, and that's now reversing. But the current story is to tilt your portfolio away from investment towards consumption. That's the current sentiment in the market.
But consumption is not coming through right now. In terms of the inflation is quite sticky. We have worries as regards the food inflation as well. People want to save more, protect their capital rather than go out and spend all. So if the consumption does not come through.
Well, then these people buying the discretionary consumption stocks will be wrong, but that's where the money flows are going. So the capex stocks, I'm still hoping the capex, shows more momentum but that's the current sentiment. I think one very straight story, though, everybody in this room can invest in for the next several years, is the travel theme in India. That is a very straightforward story, and that is basically India following the path set by, we saw in China in the early 2000s. So that if you want to invest in one simple story in India, that's what I would recommend. I don't see anything controversial or derailing that, unless borders are closed globally.
What has been your portfolio strategy as regards India? When since let's say September 2024, and when we started seeing a slow and gradual decline in the Indian equity market.
No, I haven't changed. I've slightly reduced the beta of my portfolio. The major change I've made in my portfolios in the last few months is simply to add to China, and I've reduced India, but I'm still overweight India. But if I've been very short-term and tactical, if you're only buying one market today, you buy China, not India, because the chart looks better. The chart looks better.
The chart looks better.
Yeah, the charts. If you're a technical analyst or chartist, at any time in the last 3 months, you would have bought China, not India. And unfortunately, from an Indian perspective, that remains the case today. Right now, the pattern in India is to sell rallies.
And not buy the dips?
No, that's what the chart's telling you. And you see, the backdrop is, this US equity market is beginning to look vulnerable. So the good news is India is not going to fall as much as it would have done last September if Wall Street was falling. But right now, the US stock market is looking vulnerable.
So why not buy the dips? Is it purely because of the fact that the valuations look expensive, or there's lack of conviction?
I'm just talking from the standpoint of someone who invests on charts.
Okay.
But unfortunately, a lot of people in the market do invest on charts. For someone who's long-term, I wouldn't get too focused on the chart. If you have no exposure to the Indian stock market, I think you should start investing today. Because when the turn comes, it will be very rapid.
And by when do you see that turn coming? Do you see that happening in 25 or beyond?
Well, I would hope it's come I would hope it's come by about May, if it hasn't come before, yeah. If I had to put a month on it. You've got to remember, we've also resumed easing. The central banks now resumed easing. They're announcing, I saw they announced a reduction in reserve requirements. So the easing trends now, you've got a clear change in RBI policy. RBI was running a pretty tight policy, and that's another reason why you're seeing this correction. But the change in central bank policy is clear, and that's good for the stock market.
Do you see any silver lining amongst, in all this stock fall, the stock market fall? Do you see, is there too much pessimism built into the stock markets right now, the overall sentiment, and is there a silver lining?
No. Well, no, the risk is obviously, as Mr. Kotak said, the risk is you've got a lot of first-time investors in the market. So hopefully this monthly installment product scheme remains robust, because that's a very healthy long-term trend. And so my base case is that continues.
In your India long equity portfolio, the highest weight is financials, followed by real estate, which is another sector that you have been bullish on from a long-term perspective. The markets, on the contrary, suggest something very different. No, it is one of the sector that has been battered the most in the recent falls in September.
Yeah. So
are you changing your view here?
No. On the real estate now, I'm not changing my view. So I think the real issue for the macroeconomy is the capex story. On the real estate side, you're absolutely correct. The sentiment on real estate is horrible. Because people believe the decline in the stock market will cause a wealth effect and end this property upturn cycle. Our view is that we're in the mid-cycle of the real estate market. We had a very long downturn before the current upturn. We don't see any real excesses in terms of inventory. The major developers whose stocks are in my portfolio are not leveraged, so we believe that this is not the end of the cycle. But the current sentiment in the market is exactly that it's the end of the cycle, and the stock market downturn will bring the cycle to an end. That's the current sentiment.
So you also speak to a lot of corporates, Chris. I mean, I'm sure you have spoken with a lot of corporates in your trip to Mumbai. What's the thought coming through? What are the key pain points? What are the key worry points?
No, which I've only spoken to fund managers this week. But the fund managers have clearly tilted their portfolios away from investment towards discretionary consumption, and the bank stocks are the hiding place. So there's a rotation back into bank stocks, which are viewed as a low beta. I think the dollar is a very important point here. If I'm wrong and the dollar keep strengthening, then the ability of the RBI to cut rates is significantly reduced. So I think the dollar is critical for India and indeed for all emerging markets. But it's important to remember Donald Trump does not want a stronger dollar. So if Scott Bessent and Elon Musk can explain to him in simple English that tariffs will lead to a stronger dollar, that's a good reason why he might not fully enforce them.
So what's your view on gold? It's been one of the best performing asset classes in 25.
No, gold continues to work. So I've got a huge weighting in gold in my portfolios, but in my view, gold's finally reaching the levels it should have reached 10, 15 years ago with this dramatic expansion of dollar liquidity because of the Fed's unorthodox monetary policy. But the real trigger for gold was the freezing of the Russian foreign exchange reserves back in 22, which shocked the world outside G7. So central banks outside G7 have been consistently buying gold ever since those Russian foreign exchange reserves were frozen. So gold broke the link with real U.S. interest rates. Real U.S. rates went up. Gold gold has been going up even with a strong dollar. So I think that if the risk to gold, I think long run gold remains a very good place to invest, but the risk short term is that the Russian-Ukraine war is settled, which is what Donald Trump seems to want. But so far, gold has been remarkably resilient, even in the context of Trump saying he's going to end the Ukraine conflict. So if I own gold on leverage, I'd take some money off the table here because it's already gone up a lot.
What about cryptos? The Bitcoin hit an all-time high recently. Surged 1 lakh, hit about 1,05,000, then came back to about 84. You are of the opinion.
Where is it now? 84. Yeah.
You are of the opinion that it'll scale up to 1,50,000. Do you see that happening anytime soon?
Yeah, no.
And how much of that asset class comprises your global equity portfolio?
I've got 5% in Bitcoin. And fundamentally, if you said to me you can only own gold or Bitcoin, I will own gold because it's got the history on its side. But Bitcoin is what the millennials are going to buy. So to me, with the halving we had last year, based on what's happened to Bitcoin after previous halvings, it should reach a minimum of 150,000 in this cycle. Right now, though, Bitcoin's trading like it's correlated to NASDAQ. So that's what's going on right now. For Bitcoin to be the digital equivalent of gold, at some point it has to break this correlation with NASDAQ. Donald Trump is positive for Bitcoin because he's going to put it on a more, it's going to become sort of regulatory more safe. So personally, if you don't own any Bitcoin, I view this as an opportunity. But if you only want to own gold or Bitcoin, I would own gold because I'm being conservative.
If you were to put a number to the returns that one can expect from Indian equity market over the next 1 year, what would that number be, even if it's a range?
From here now?
From the Indian equity market from here on, let's say for the next 1 year, 12 to 18 months, what is the kind of return an equity investor can expect? A number to it or a particular range?
Well, hopefully we can get 10%, 15%. But this time next year, well, hopefully we've gone lower and then rallied, yeah. Yeah.
Okay.
But I think the key variable there is the dollar. Are you talking dollar terms or?
INR and dollar terms both.
Well, in IR terms, I'd say 10, 15%, yeah.
Okay.
But I think the key variable is the dollar, yeah. Because that will determine how much the central bank can ease.
We'll open up the floor to the questions. Fanny? So let's start with the lady. Let's start with the lady.
Hi. Thanks. It's a very good presentation of the global summary. But I want to ask you, and I'm curious to know, what happens after 4 years? I mean, if you're talking about policy implementation, and if you're talking about putting strategy into work, 4 years is not a long time. So are we looking to go back to 2024? Or what is the future? I just want your thoughts on it. Thank you.
Policy where? Sorry, policy where? So,
I mean, you know, Donald Trump, in the post-Trump era, this is 4 years, right? What happens after 4 years?
oh, well, no, that's the risk. So, yeah, so I'm saying the Chinese should offer to move production. So the Chinese will understand that they need to give Donald Trump a win. So setting up a factory in America gives Donald Trump a win. In fact, he just wants the press conference announcing it. But the longer term issue for the Chinese will be precisely the point you make, that maybe someone comes in America who's from the other side and wants to close down the Chinese production. So that is an issue. And that's why they're going to try and present Donald Trump with a win without making a huge, massive financial commitment. So that's a risk, yeah. But I would say if Elon Musk amazes the world and fundamentally achieves his goals, which, as I say, nobody believes. I personally don't believe, but I don't want to write off Elon Musk because the history of Elon Musk is that he achieves what he sets out to do. If Elon Musk succeeds in cutting $2 trillion from the US budget, he will set a template for all Western industrial economies where welfare states are out of control. And that will be a big deal because then in all these countries in Europe, heavily taxed countries with massive welfare states, people will no longer, there'll be a mass protest because you'll have seen an example that this is possible. So I think that this whole Dodge agenda from a global picture is a very big deal, especially from a developed world deal in terms of US-Europe.
Anybody else? You had a question, right?
Should you give weightage to India more than you do now? I mean, that's the thing. Because, 4 years, everything will be, the tables will be turned again. So would you...
Oh no, I'm hoping to add to India during the course of this year. But the problem right now is that foreigners are selling a huge number of stocks every day. So I think the key short-term metric to watch in India is foreign selling. Because because that's where the selling pressure is coming right now.
Please go ahead. Please switch on the mic. Anybody else?
Yes.
I wanted to understand where do you see China BYD at its peak?
I can't answer. No, we can't answer that. But obviously, I think the interesting point about BYD in China is while there's been a lot of focus on the domestic issues in China, and China's been in deflation, and consumer confidence has been very weak, on the export front, it's often missed out that China's currently achieved a record, is running a record trade surplus, and you see growing diversification of its exports away from the G7 world to the global south. So a growing proportion of Chinese exports are to the global south. And, BYD is a big part of that. And yeah, BYD looks like it's going to be the new Toyota.
It is. Yeah, so...
One last question, please.
So the interesting question is, will the new Toyota be allowed into the US market? So back in the 1980s, when there was this lot of tension between the US and Japan on Japanese car imports, that tension peaked when Toyota and Nissan set up plants in America.
Right, I got it. So, so where do you see the Chinese...
One last question, please. One last question.
Hi, this is me at the back. So, what is the possibility of Tesla's entry into India and when it is expected? And what is the view of auto sector of this in India?
What's the news flow? I don't know what's the news flow on that.
Let's entry into India. What is the impact on the auto sector in India?
There's definitely a thing.
No, nothing concrete yet.
Oh.
I think it's too early to answer this question.
Yes.
They're still, they haven't set up a plant yet.
May I ask one question?
Last question, please.
Yes. 2 days before, there was a story in Business Standard that this foreign money will not come back soon in Indian stock market. What do you think that what will be the next biggest trigger to attract the foreign investors in Indian stock market, sir? That's my question.
Biggest trigger
What will
to
be
attract foreign money
What-
into Indian equities. What can attract?
I think let's say if the foreigners saw the domestic investor capitulate, and you saw the flows in the mutual funds suddenly stop, and then the market that would fast forward, that would accelerate the correction, and then the foreigners would come in. If you saw the mid-cap valuations converge with the blue chips, I've got charts, but they're not. Yes, as you see mid-cap valuations converge with the blue chip valuations, the foreigners will come in. Because the big cap stocks are basically in line with historic valuations, and the mid-caps are still above them. I have
Thank
a chart to show that.
Thank you, Chris. Thank you for a
Thank you.
wonderful session. Thank you for all your thoughts.
May I please request for the memento to be presented to Mr. Wood? very engaging session for all of us, I'm sure. Some very important points, Mr. Modi, you've made about the US and how you see the US-China relationship improving under Trump. Very interesting points about how higher tariffs will hurt America.